Overview of health insurance. Many employers provide health insurance to employees, which is great, but unfortunately this benefit can be complex and intimidating. Let's try to demystify it. Here are the learning outcomes for this video. By the end of the video, you should 1. Understand basic health insurance vocabulary. 2. Understand what premiums are. And 3. Understand how you, as the insured, share payment of costs with the health insurance company. Let's get started. One reason health insurance can be intimidating is because it has its own vocabulary. Let's review some important terms to make sure we understand them. Health insurance is a financial protection tool that transfers payment responsibility for some of your medical expenses from you to a health insurance company. A plan is the document from the health insurance company that states the most important insurance terms, such as how much the insurance costs, what medical expenses are covered, and the process for using and paying for healthcare. Good health insurance plans will pay for or cover medically necessary healthcare and also cover preventative healthcare procedures such as annual checkups and vaccinations. Whenever the employee incurs a medical expense and asks the insurance company to pay for some of it because it's covered under the plan, this is called a claim. A network is a group of healthcare providers, such as doctors, nurses, hospitals, and labs, who have contracted with the health insurance company to provide their procedures and services at a lower cost. Because in-network providers are cheaper for the insurance company and ultimately for you, employees are encouraged to use them instead of using out-of-network providers. One reason healthcare is so expensive is because there can be a lot of costs for a single treatment. For example, if you go to the hospital for a broken bone, you might be charged money by several different providers, such as a surgeon, a nurse, and the hospital. Because healthcare is expensive, the health insurance that pays for it is also expensive. The word premium means how much money the health insurance company charges your employer for the health insurance. Premiums cost a lot of money because they don't just pay for health insurance claim costs, but they also pay for the insurance company's business expenses and profit. Premiums work kind of like an Amazon Prime or Costco membership. Those memberships require you to pay an annual fee that unlocks some benefit, like faster shipping for Prime or access to the store for Costco. But those memberships are really just an entry fee, because if you decide to buy something from either Amazon or Costco, then you still have to pay for it, even though you already paid the membership fee. Health insurance premiums work like this too. An employer must pay premiums even if its employees don't incur any healthcare expenses. We'll walk through some examples of premiums in subsequent videos. Premiums aren't the only costs that are incurred as part of health insurance. When there's a claim, meaning you incurred some healthcare costs, you'll typically have to pay a portion of these costs. There are some vocabulary words that explain this cost-sharing relationship between you and the insurance company. A deductible is the amount you pay for claim costs before any health insurance starts paying out. After you've paid out enough claim costs to meet your deductible, then you'll typically still have to pay a percentage of the remaining claim costs while the insurer pays the rest. This is called coinsurance. Co-payments are a fixed amount you pay for certain claim costs, such as paying $50 for every telehealth consultation. Co-payments may, or may not, count against your deductible. And finally, good health insurance plans will cap the amount of claim costs you'll pay using your own money. This cap is called the out-of-pocket maximum, or max. Let's talk about who pays for specific claim costs. Costs incurred before the deductible has been met are 100% paid by you. After the deductible has been met, you'll split claim costs with the insurer. This split, called coinsurance, will be defined in the plan and is typically expressed as a percentage. For example, 80-20 coinsurance means the insurer will pay 80% of the claim costs after the deductible, and you'll pay the remaining 20%. If you incur any co-payments, then you'll pay 100% of those. You pay coinsurance and co-payments until you hit the out-of-pocket max. Once you hit the out-of-pocket max, the insurer should pay 100% of covered claim costs after that. If you didn't know much about how health insurance works, this video might have seemed overwhelming. Don't worry. We're going to talk more about health insurance concepts in subsequent videos. In one upcoming video, we'll even use real dollar amounts to illustrate claim payments and cost sharing. That's the end of this foundational video, but just a reminder that this video is part of a longer playlist. The playlist is in chronological order, meaning videos at the beginning of the playlist cover things that occur at the beginning of a job search and vice versa. If you liked this video, then you should check out the other videos in the playlist. If you thought this video was confusing, then try going backwards in the playlist to learn more about job search up until this point, or even forwards in the playlist to see how things come together. Thanks.